Welcome back to Compound Interest, the channel that rational thinking calls its home. Well, is there actually rational thinking in Counter-Strike investing? To put it in a scientific wording, is the CSGO market efficient? Can the efficient market hypothesis be applied for investing in Counter-Strike? These are the questions that I want to talk about in today's video, especially after seeing the huge price spikes in the Stockholm 2021 Challengers sticker capsule. How can this happen? To start it off, I want to define what the efficient market hypothesis means. The term is most often used when talking about the stock market and whether or not it's possible to outperform the general market by picking single stocks instead of buying the whole market through an index fund or ETF. Though the idea of efficient markets is a lot older, it's often attributed to Eugene Fama in the second half of the 20th century. I do not want to make this video extra boring by giving you guys a historical analysis, thus we now look up the definition given by Investopedia. Investopedia says, the efficient market hypothesis states that share prices reflect all information. What does this have to do with Counter-Strike investing? Well, the efficient market hypothesis can be discussed in every market out there, not just the stock market. And in the latter half of this video, I will talk specifically about what this means for your investment portfolio. I will argue that the CSGO market isn't efficient, and I have two main factors that disprove the efficient market hypothesis in the CSGO market. My first point is that important information is seldomly available and mostly community made. Now, please don't get me wrong, especially when some contributors are watching. The work that people like Fierdik with his monthly case opening calculations and Feltz with his sticker watch are doing is valuable and can't be praised too much. But as long as we get pretty much zero to no numbers and statistics from Valve concerning supply and demand of stickers, cases and skins, any estimates by the community falls flat when being compared to highly regulated public companies that have to release inspected financial statements. Sure, there are companies out there, like Wirecard, who managed to betray investors through fraudulent activities, a phenomenon that the Counter-Strike scene is no stranger to. Funnily enough, the only time we can expect absolutely reliable information, it's actually coming from the financial statement by the CSGO team Astralis that will publish its commercial statement, and we will learn how many Stockholm 2021's Challenger sticker capsules were sold. Our understanding of the supply of cases and capsules is quite a bit worse than our knowledge about the demand. The aforementioned great work done by community members can only roughly estimate the demand by skillfully analyzing data on CSGO Float or other databases. But the closest we get to knowing how many cases are out there is via a single scan of 450,000 inventories, a small fraction of CSGO accounts, done by one community member around a year ago. Again, that work is incredibly valuable, but in my book we can agree that the work done does not come close to reliability in other asset classes like stocks and bonds. The market can only price in the information it knows, and if that information is probably highly inaccurate, we cannot speak of very efficient markets. My second and also important point is that the Counter-Strike market is more complex than other markets. Now, please give me a second to explain this ridiculous sounding argument. While there are different types of shares like common and preferred stock, call and put options, employee options, and many more different financial instruments, the Counter-Strike market is just made of a couple of skins and cases, isn't it? Well, yes, but we actually have one specific factor that neither bonds nor stocks share. A huge part of the CSGO market is not made up of investors, but actually consumers. Consumers aren't just interesting as they play a crucial role in how we are making money as investors, they are opening cases and applying stickers, but also because their behavior is likely less rational and definitely differs from investors. Meanwhile, pretty much every penny that goes into stocks and bonds, even including meme stocks like GameStop, is for investing purposes and with the goal in mind to make money. All asset managers, AI, trading systems, and most small investors try to act as rational as possible and also try to find the next investment success, some more successful than others. It's quite hard to estimate how many of the traded CSGO items are actually bought by consumers and how many by investors. Though it seems quite obvious that certain items like old cases and stickers are mainly in the hands of long-term investors, especially the higher the price go while newer and lower cost items are used and opened up by consumers. Obviously, a very, very strong simplification. But disregarding whether there are more consumers or investors putting money in any single case, capsule or skin, the fact that there are consumers who do not care if they pay 5, 10 or even 50 cents for a case makes the market less efficient. Something similar says Investopedia. Some markets are less efficient than others, and one important point that they add is low liquidity. And we see low liquidity in certain points of the Counter-Strike market, like older stickers. Now, if you have a hard time remembering what I've talked about in this video because I'm too dumb to formulate grammatically correct sentences, please try to decipher the remaining and, in my opinion, most important part of this video, where I try to argue that it's actually great for us investors that the market is inefficient. I highly suggest you to check out my previous video, where I've talked about risk when investing and how certain risks actually enhance return. Why do I bring up the factor risk again? Because a perfectly efficient market with all information priced in is a lot less risky as an inefficient market. That's the case because every participant knows exactly what they are getting involved in and everybody can calculate their expected return. That doesn't mean that you won't see any volatility in such a market with unforeseeable events taking place, but hype spikes and crashes are amplified when taking place in an inefficient market. Higher risk, as discussed in last week's video, increases return. The CSGO market being less efficient than other markets is actually one of the main reasons why we have seen such great returns over the last years and might also expect good returns in the future. I want to give you guys one simple example that underlines my argument quite clearly. Stockholm stickers are only a couple of months old, but when compared to RMR stickers, we can see two extremes. One time, when the player count was at its highest, insane quantities of sticker capsules were bought, even though the stickers weren't even considered to be great looking. Many expected those capsules to be overinvested, but we didn't and still do not have information about the exact quantity of the different capsules. After a short upward movement, the prices of the RMR capsules spiraled down with a huge supply outstanding and low demand remaining. On the other hand, we have the Stockholm stickers. Still early days, but it seems like we have a lot less supply while the stickers are objectively looking better than the RMR ones and thus demand being higher. Obviously, a final analysis can only be done in a couple of years, but it already showcases that the lack of information and irrational investors, if you even want to call them investors, have a huge influence on the market. That's an important reason to diversify, but also the reason why we can see outstanding returns in certain investments. Rational thinking and good analysis will help you to find good investments more often than bad investments. As I do not want to make my videos too long, mainly as my content is probably a little harder to digest than that of most other content creators in the space, I will come to an end now. There are many more things that I want to talk about. To give you a hint, I see signs that the Counter-Strike market has actually become more efficient over the last years, thus reducing expected return, though that expected return should still be considerably larger than most more conservative asset classes. I also believe that third-party marketplaces like Buff and the 7-day trade hold are reasons for the inefficiency of the market. Also, the younger age for a lot of people involved in the space might make the market more inefficient. But as I said, that's content for future videos. If you find this video interesting, I would highly appreciate a like as that helps me grow the channel, and maybe also leave a comment as I would highly appreciate constructive feedback. I'm just starting this channel, and you can be certain there are a lot of interesting topics to talk about in the future. Thanks for watching my videos. Till next time, bye bye.